Bitcoin just sustained a $9 billion gut punch and barely flinched. Let that sink in. The rumors swirling of a Satoshi-era whale dumping 80,000 Bitcoin worth over $9 billion became reality late last week, and what is now being described as the largest Bitcoin sale in history. Today we'll dive into the details of this story, what the impact is on the current market, and how this represents a kind of climax to an epic market rotation we've been seeing over the last few years. And stick around because I'm going to shed some new light on how this and other dynamics might signal a final nail in the coffin of the traditional 4-year Bitcoin cycle. One of the largest sell-offs in Bitcoin history went off as smooth as butter late last week, when a mysterious Satoshi-era Bitcoin whale offloaded a whopping 80,000 coins worth over $9 billion. The story started on July 4th, when 8 2011-era wallets were reactivated, consolidating the 80,000 stack into fresh addresses. Then, on July 15th, the whale began sending large batches of Bitcoin to Galaxy Digital, starting with 16,000 routed through exchanges like Bybit and Binance. Additional transfers followed, including 40,000 coins. This was part of a phased movement totaling 80,201 Bitcoin. Then, on July 25th, Galaxy Digital announced the massive transaction via op return, calling it one of the largest notional Bitcoin transactions ever. They also said it was part of the investor's broader estate planning strategy. Galaxy said in the press release that it was one of the earliest and most significant exits from the digital assets market. Despite the massive size of the sale, incredibly, the Bitcoin market barely budged. Prices dipped below 115,000 on Friday, but recovered quickly back around 117K. For comparison, Germany sold 50,000 Bitcoin last summer, which triggered a 15% drop in the price. With this larger sale, the price dipped just 3.5% and recovered within hours. This 80,000 Bitcoin is also roughly the number of Bitcoin dumped by Luna during their Ponzi collapse in 2022 that sent Bitcoin plunging into a bear market. And now it gets absorbed and shrugged off like it's nothing. If this isn't a testament to the liquidity, strength, and maturity of Bitcoin today, I don't know what is. In all honesty, I think this might be the most insanely bullish thing to happen all year. We all knew institutional demand was through the roof, but for this kind of resilience to be on display for the entire corporate world to witness is truly incredible. But what's even more bullish than the way that the market reacted to the sale is the fact that it seems to represent a climax to the holder rotation we've been seeing in Bitcoin over the last couple years. Bitcoin is in the midst of completing one of the largest holder rotation in its history. Let me explain. With every asset on the planet, not just Bitcoin, there are always capital rotations into the highs. In other words, the crowd that bought low eventually has to take some profits. And just look at this hodl wave chart. The thick red waves are short-term Bitcoin, less than 3 months old. And as you can see, it spikes every cycle as older holders take profit and fresh hands step in. As you can see, each peak lines up almost perfectly with the local top in previous cycles. That's what I mean by capital rotation. But now, look closely at what's happened over the last 2 years. We've just witnessed a massive redistribution of Bitcoin from old holders to new ones. The long-term wave, that deep green and blue foundation, has thinned, and it's being quietly and relentlessly replaced by deep-pocketed, long-horizon buyers like institutions, corporations, and pension funds. Bitcoin has already rotated to a new base of long-term holders, and I'm arguing that that 80,000 Bitcoin sell-off was the climax. The legacy whales are all but gone. They sold into strength, and the market absorbed it, barely flinching. It also means the supply has moved into hands that aren't interested in flipping for 2x. They're here for pristine collateral, for generational wealth, not unlike what this Satoshi-era whale now has today. And this is the part that most people miss. Rotations create pressure. They build the base for the next explosion. Just like in past cycles, only this time it's bigger. More patient hands with broader access to capital and higher conviction. This is exactly what Michael Saylor was talking about a few months ago on Natalie Brunell's podcast.
When the rhetoric has changed from the White House and we have the strategic Bitcoin reserve and all these tailwinds, you're buying pretty much every Monday. Why isn't the price at 150 or 200K?
I think we're going through a rotation right now where lots of non-economically interested parties are rotating out of the asset and a new cohort of investors are entering. A lot of Bitcoin was, for whatever reason, left in the hands of governments, in the hands of lawyers, in the hands of bankruptcy trustees, like the FTX bankruptcy, and they had to hold it for a year or 2 years as they're working through their process. And then when they saw this massive market rally, I think a lot of those trustees, they don't have a 10-year investor's mindset. They just thought, well, this is a good exit point to get liquidity. So I think people less committed to the long term have been taking this opportunity to exit the market. And I think a whole new class of investors are entering by way of the ETFs and by way of the Bitcoin treasury companies.
So all signs are pointing to this rotation being all but complete, and what happens next can't be more obvious. So what does this all mean for the 4-year cycle theory? Well, Mitchell Askew of Blockware points out how Bitcoin looks like two entirely different assets before and after the ETF approvals in 2024. He argues that the days of parabolic bull markets and devastating bear markets are over. He says that Bitcoin is going to $1 million over the next 10 years through a consistent oscillation between pump and consolidate, saying it will bore everyone to death along the way and shake the tourists out of their positions. Bloomberg ETF analyst Eric Balchunas agrees, quoting Mitchell's thesis and saying, "This guy gets it. We've been saying this exact same thing. Since BlackRock's filing, Bitcoin is up like 250% with much less volatility and no vomit-inducing drawdowns. This has helped it attract even bigger fish and gives it a fighting chance to be adopted as currency. Downside is probably no more God candles. Can't have it all." Author of Layered Money and Bitcoin Age, Nick Bhatia, was on What Bitcoin Did this week, and he echoed this very real possibility.
What would be the thing that breaks the cycle? Is this time like structurally very different?
I believe we could be in an environment now where the accumulation of Bitcoin remains steady for several years, and the Bitcoin price oscillates around a multiple to realized value. As realized value continues to increase, Bitcoin continues to chop around 2 to 3 times its realized value, and just is in a structural bull market that can have periodic consolidations or even bear markets where Bitcoin falls 20, 30, 40%, but it's in this oscillation around 2x its realized price. So right now the realized just crossed over $50,000 and the cap at $1 trillion. So 2 times that is 100,000, 3 times that is 150. So I would expect the price to be between 100 and 150,000 here over the next several months. As that 50,000 realized price goes to 80, then the range then moves from, to 160,000 to 240,000. And that we're oscillating. Now, if you go from 240 to 160,000, that's a pullback of 33%. That could happen even over a year. And it still wouldn't be this previous, what I would call the cycle, the halving-driven cycle, where you get these rises up to 4 times realized price, and then a crash back down to 1 or even 0.9. So that is the way that I'm thinking about the next few years.
I love how Bhatia labels this thesis not as a supercycle, but as an elongated cycle. As more and more evidence is piling up and leaning towards the 4-year traditional cycle dynamics being broken this time around, where we could see the bull market stretching into next year, if not a bit longer. And what will it take for this elongated cycle to come true? Just a continuation of what we've been seeing over the last 2 years. Dampening volatility, smaller corrections, and an overall slow grind up. Bhatia also talked about Bitcoin's volatility compression and how current buyers are incentivized to keep the market from becoming overheated.
So one of the charts we've been charting is Bitcoin's trailing 30-day volatility historically. And if you it's just compressed. And the last 3 years, the volatility can be described as muted versus trailing 5 to 10 years. Even if you look at 2021, the volatility was so much more than it is today. And so this compressed volatility is the new structure of the market, I believe. And compressed volatility prevents the 4x MVRV ratio. And if you can never get to 4x, then you can avoid the winter, because the winter is so much destruction on the technical chart. And so you avoid the destruction. And I believe that the structural buyers, for example, the strategies of the world, they would love to prevent overheated Bitcoin prices because they believe that it could lead to a more winter-like environment in the subsequent months or years. So that's, I hope, Danny, I've answered a few of your questions in terms of how I'm thinking about this current bull market.
Yeah, no, that makes sense. And so, like, what you're saying there is we won't get the blow off top like we have in previous cycles, but at the same time, it mutes downside volatility.
I'm in that 60-40 that we would avoid it. Yes, I'm hoping that.
So let's just recap where we are now. The market just absorbed an 80,000 Bitcoin dump like it was nothing. That kind of strength doesn't happen in speculative froth. It happens when supply has already rotated into strong, patient hands. And it's the clearest sign yet that Bitcoin has evolved. The cycles might not be dead, but they sure look to be maturing. And the next move up may take longer, grind slower, and shake out the weak hands every step of the way. So if you're building serious exposure or helping your clients do the same, now is the time to get strategic. Swan Private works with high net worth individuals, family offices, and institutions looking to accumulate and custody Bitcoin with full white glove service and education. Visit swan.com/private to book a call with a member of the team today. And if you want to meet with the people shaping Bitcoin policy, regulation, and capital flows in real time, join us in Washington, D.C. this September at BTC in D.C., where lawmakers, asset managers, builders, and sovereign leaders will be gathering to map Bitcoin's future. Get your tickets now at btcindc.com and use promo code SWAN for 10% off. And finally, a quick shout out to Mara, the world's largest publicly traded Bitcoin miner, for supporting this show and for helping make Bitcoin the world's most decentralized and secure monetary network. So what do you think about this epic Bitcoin holder rotation and the massive 80,000 coin dump we saw last week? Are we witnessing the end of the 4-year cycle as we know it, or will it just extend into next year? Drop your thoughts in the comments below, hit that like button if you enjoyed the video, and share it with someone who's still stuck in 2021 thinking. And don't forget to subscribe, we've got more deep dives coming every single week. Stay humble, keep stacking, be patient, and remember why we're here.